Welcome to another exciting edition of the Trading Bell. Today on the show, we have a new entrant in the game, and this is the new KCB CEO, Paul Russo, who took over from Joshua Oigara, a man on a mission, and they've just released their results. The numbers are looking good at about 19 billion shillings in net profits. Will he steer the bank to greater profitability? Welcome, Paul, to the show. An honor to have you on the Trading Bell.
Thank you so much. Great to be here.
Fitting into very big shoes that were left by a predecessor. And top on the list, you've just released your half-year results. How do you feel about the numbers?
So I must say, a very great chapter for that Joshua has written with KCB. And remember, I've worked with Joshua for 8 years. So it's been great collaboration to get here. The results that we released, I only took over as CEO on 25th of May 2022. So kind of releasing Joshua results, if you get what I mean.
I get it.
But writing the next chapter is my conversation, because we run transitions, and you're given the challenge to run the next transition, the next chapter. Results, are good, but the number of parameters that we believe should not be what they are, and there are plans we have plans to fix some of those. You must have seen cost of funds and NPL as a key issue.
Correct.
But overall, very good results by the team. Seeing strong performance in Kenya, but overall significant growth from the regional businesses, and that for me is a signal that we can build on to that. Interesting.
And clearly, from your opening remarks, the results could have been better, and certainly we're looking forward to the full year results. What can we say we can see in your crystal ball? I'm not sure that got a crystal ball like the journalists, but a very sustained high momentum on performance. Remember, we're trying to get DRC entity into KCB family in Q4, but we are also going to see significant drop in NPLs. Non-performing loans, and that should bolster our bottom line. We've also deployed quite a number of investments that should start commercializing. So I'm bullish about the outlook, if I was going to use that term. Speaking about the outlook, let's talk about one of the big conversations for banks right now is playing in the digital space, and digital lending has evolved over time. As a bank, what will be top on your in tray in regards to accelerating the business as well as diversifying your revenue streams?
I think top for me is digitizing SMEs. That I want to bring that to life. We've digitized, whether it's KCB M-Pesa, whether it's Vuma, whether it's Fuliza, that is in play, and you've seen the numbers coming through from that. How do I make connection with SMEs and lending to SMEs a lot efficient and scalable? And that's where technology comes into play. But I think if you also look around, we've got opportunities in wealth management as a key proposition, and so I want to be in that market before the end of the year. Certainly, I don't see why I shouldn't be in before Q4. We've got the right documentation. We've got resources already on board, and that also has to come with technology. But I think there was also what the group chairman mentioned about partnering with an underwriting entity and digitizing the insurance side of it. That should also give our KCB bancassurance intermediary
a lot of tailwinds. So those are a few reasons why I'm bullish. You've got your daily bread, the retail banking lending, the corporate banking lending in place. But I think it's in action for us about how we digitize our relationship with corporate banks, whether it's host-to-host models, how we take our internet banking into that space. So I can go on and on, but the tray is full on digitization, and we have to scale up our IT capability to deliver on that.
Interesting. And Mr. Russo, you've touched a very important nerve, that is wealth management. Don't you feel this space is already crowded? And what are the fundamentals that are sort of triggering the bank to consider tapping into this line?
So I think first, and the most basic one, is you've got your customer base. And you've got to make sure that there is no reason why I have my customer taking wealth management solution from another party. Mm-hmm. So you've got to be able to deliver value for your customers. And if you think about whether it's wealth management, insurance, and all that, I want my customer to have every single item, requirement, need fulfilled by KCB.
Mm-hmm. Excellent. Let's shift gears a bit and talk matters regional now. We've seen majority of the banks are now looking towards DRC. The clamor for DRC is gaining momentum by the day. What is it that bankers are seeing that is luring them to this market?
I think first, we must see DRC is a new member in EAC. You look at the population, it's always something to look at. See the level of underbanking, given the historical political issues that have happened. But also on a skill basis and ability to scale up banking and provide solutions. But you also follow your customers. So you've got customers moving in there, and you've got to be able to fulfill that. So I think there are various reasons why you want to do that. But you must look for what fits into your competency. So just going in doesn't make sense. So we've been We've been working on the DRC deal for a while, mm-hmm. Looking for the right partner. It's also a very interesting terrain. Just to tell you, that's why we are not taking the entity 100%, because we want the other parties, we want partners we can work with, mm-hmm. to build knowledge in the market, to build value, but we want partners who are also interested in building values. So maybe front-running, answering your question about why we are not 100% and now we are going to deliver value. So, so we have an agreement of how we are going to build partnerships and value.
All right. And speaking about the regional subsidiaries, of course, banks did burn their fingers when you look at the South Sudan market some time back. And it had a big impact in regards to the bottom line at the end of the day. This time round, one of the big conversations that the central bank has been advocating for is good corporate governance. And this was one of the pledges you made, that you would actualize in your first, of course, in the political season, we've crossed the 100 days mark, but how is the governance card being played out, especially you being someone coming from an interesting past where you were at National Bank, which has also gone through some interesting milestones when it comes to rebuilding the bank to a stronger institution?
So let's just say, for any entity, governance is a critical pillar, and it's important for every organization to make sure that you've embedded, you've embraced, and you've strengthened your governance structures.
So the good thing about KCB, we just don't say we are very strong governance, but here is how we run subsidiaries, by the way. Every subsidiary has a group board member, right? Every subsidiary has a group executive as a board member, right? The rest of the board members come from the country or the market. So if you go to Uganda today, KCB Uganda, there is a group board member in that board. There is a group executive. And now that I've picked Uganda, for example, our CFO is a board member in KCB Uganda. Our group shared services director is a board member in South Sudan. I'm a board member of BPR, I'm a board member of NBK, a board member of KCB Kenya. But in each of them, there is a group board member. Not a chair, but a board member.
Yeah.
Because you need to make sure 3 things happen. One, you have local representation, particularly at chairmanship and the rest, that is relevant in the market, which includes your MD. Number 2 is you have a group board member that ensures that messaging from group and standards from group are actually adhered to. And you have a group executive who ensures that the management in that entity receive the right level of support in that board, and if there's anything that needs to be escalated on a management perspective, that has happened. I tell you, there can't be a better way to try and run governance. It's the same thing we're going to take to DRC.
You are quite bullish also about Rwanda getting to a point where they'll surpass the NBK.
They have actually. They have. On profitability for H1, they have.
Yeah.
If you see NBK is 1.05 or something, I can't remember the exact decimal point, versus 1.5.
Yeah.
But I sit in the board of BPR, right? And I sit with Dr. Bagaga, who is a group board member. The chair is a local board member, and the rest are local board members. The expectation, what I speak about Bank 1.5 when I was presenting, is not something that it's a Paul dream. It's a shared understanding with the board members. So I'm not bullish about BPR just for the sake of it. I'm bullish because I'm a board member and I know exactly what we are doing.
All right. And finally, on the regional subsidiaries, of course, competition equity has also made its pledge known as they also plunge into the DRC market. And the race to the top continues. Do you feel the bank is now at a better advantageous position to finally unsettle the gains that your competitor has made in some of these markets?
You know, I wouldn't be here if I didn't believe that we'll be the undisputed leader. So that's first. I think there is always a skin in the game. But I am a firm believer. I've been in KCB for 8 years. We've got the right competencies. And let me just take you a step back. When I took over regional businesses, and you can check on statistics, the contribution from regional businesses to KCB was 5%. Yeah. Today, we're speaking about 15%, even before we bring in DRC, right? So I think, like I said, when today when we're releasing the results, what is going to be very different is execution, right? We know what we need to do. We will do it a lot faster than before. So give me a benefit of doubt and watch this space.
Watch this space. And I just want to get your closing thoughts, especially now that we are slowly transitioning after the elections from your viewpoint as an executive of one of the top banks in the country. What's your medium-term view? What is likely to characterize the banking space?
No, I don't want to be a political commentator. I just believe that this country is very resilient.
Yeah.
I think the results that have been released by banks so far demonstrate resilience of Kenyans. We've seen a lot of resilience, even in the most difficult times
from SMEs. And look, banks, whoever becomes the president, banks are the core of transforming economies. Mm-hmm. Banks will be at the core of delivering the manifestos that have been put forward. The importance of banks, I can't just overemphasize that. So I think we are in a good space as banks. We've got a very good working framework within Kenya Bankers, as well as working with the central bank. Banks will be there to power Kenya to the next level, and I'm bullish about the outlook. Not just because of anything, because of the resilience of Kenyans. You see economies, COVID period, right? Because I'm preaching to a converted. You saw when there was no hope, right? As let me speak from the region, we withered that, right? But to be more relevant, how many people probably took leave expecting other outcomes in election, and look at how things have progressed? This is a very resilient nation, and people understand what needs to happen. And so I believe banks will be there at the core.
Interesting. And finally, your last closing thoughts, of course, when you look back at the rear mirror, part of your profile was really developed when you were at NBK. Are you happy with the NBK you left and how they're progressing so far? And where would you like to see them play?
So let me correct you. I think NBK was just one of the key pillars. If you look at my careers, I've always run very high-risk jobs and built my resilience, my capabilities in there. If you look at my period in Barclays, the work that we did in Tanzania for Barclays, the work that I did in the region of across 13 countries in Africa for Barclays, the drive, particularly in those days, the drive for efficiencies and customer orientation, away from training, reflect around, people forget, we reopened Chase Bank, and I ran Chase Bank for 2 years or thereabout. I ran regional businesses, as I said, taking contribution from 5% to 15%. NBK is special because it was a time to read an entity in that shape, that important, of that size, and it was part of KCB. And we've made progress, and you can see that. But I think there is a lot of ground to cover. So one of it is standardization of technology. If you allow me to explain. So when you take an organization and take over an organization, and that's what I was saying earlier on when we were releasing the results, your first role is to take control and to evaluate and determine quick wins. Now normally, typically, the easier quick wins is from a technology integration and backend. For NBK, we went in and something like the core banking had a lot more years on contract pending, and it's different from KCB. So you still have to crank with that contract, but you can't get the efficiencies because you're going to burn a lot of money. Sorry for being too detailed, but so we chose to run. Yeah. We chose to run that out. So there are a lot of efficiencies we haven't got out of NBK because of the nature of IT contracts that were in place. They are coming to an end. So by March next year, they will be on the same core banking with KCB, and that just delivers a whole different ball game about how you can deliver through NBK. I think we've been working about value proposition and how you deliver that value proposition. You're unable to strip out the cost because of the hardcore contracts that exist. That's coming to an end, and we've been patient. We've been patient with it. So another running to June, next year a lot will have changed on the NBK front.
All right.
And remains a front for us to challenge the market. So attack from two brands, but with efficiency.
Okay.
Yes.
Fantastic. I'm certainly sure we'll be hosting you later on to just get more insights into the industry. Many thanks, Mr.
Thank you so much and much appreciated.
Paul
Thank you for
Russo,
having me.
for speaking to us
Thank you.
on the Trading Bell. And he's quite optimistic, and his clarion call is watch this space. Well, that brings us to the end for this week's edition of the Trading Bell. My name is Abi Agina. On behalf of the entire crew, we say bye-bye for now and keep safe.